We're sitting down today with Gus Demos, managing partner and founder of Perpetual Assets. Thank you so much for joining us today, Gus, and welcome everyone who's listening.
Thank you for having me.
So I was speaking with Andy Hoffman recently, who wrote for many years for Miles Franklin. He's a big gold bug, and he was saying that the gold market is dead, that he thinks all of the demand that was previously going towards gold is now going to go towards cryptocurrencies. Gus, is the gold market dead?
I've met Andy numerous times and have been following his work for a long time as well. And yeah, I tend to not be as perhaps speculative and axiomatic as he may be, meaning that's a pretty bold proclamation. So yeah, when someone becomes axiomatic towards a certain asset class, I think many times they become subjective and biased and go. I mean, ultimately, people could crunch all the data they want and say there's swings, and pendulums, and all that. But our position with clients is we sell both, right? So, I let me give you a metaphor. I own both horses, crypto and metal. We're dealers of both. So I don't. It's easier for me to stay a little bit objective about it. It's possible to invest in both. I don't know why it has to be, and this holds true for the other side of the pendulum. There's a lot of people who I think ideologically are tied to metal, who for a long time were anti-crypto. And my position from the beginning was, I don't know why people have to go in with this all or nothing approach. Like, oh yeah, you have to own nothing but gold. If you own Bitcoin, you're a sucker. And from what you just told me, I don't want to put words in the man's mouth, but the fact if he's taking an approach of you got to go all in crypto, metals for suckers, I'd be like, really? Why? Like, why can't you do both? So my position has always been much more of an open mind and a hedge of I would never tell someone to go all in on something. And again, even as a crypto and metals dealer, if a client calls me and says, "Oh, do you think this is a bad idea?" I'd be like, "Well, you don't have to go all in. It's not an absolute proposition, So again, I don't. Gold's been around for a long time. Crypto's new and exciting. I think both are good assets, obviously, and I would never take the position of all in one or the other. And we never have as a firm, and I never have as an individual. I think that's very. Again, I think it can become, you can consider it ideological and axiomatic, and I think those are when as it pertains to wealth, I don't think those are two attributes you want to have. I think you want to try to almost stay robotic in your approach, acknowledging that hey, there's a lot of variables that could play out. If that makes sense.
Yes, it does. My position is that, like the internet deplatformed CBS, ABC, BBC, the handful of media organizations that controlled most of the communications on the planet until the internet and then social media came to fruition. We could see the same thing with banks, with Bitcoin and other cryptocurrencies and gold. You don't necessarily need to hold your wealth in bank accounts or the financial stock market. I'm not suggesting that anybody do that by any means, but the competition's now there.
Right. My difficulty with crypto, and this is not the company's difficulty, I have to always remind people. So I have two positions. A shareholder at Perpetual Assets is one position, and then I have Gus Demos, the individual, that's another position. Now, as far as my fiduciary responsibilities as a shareholder, I can't talk about speculation at all. We facilitate transactions and we don't make recommendations. Me as an individual, I would say the one difference between, well, not one difference, but the difference between gold and silver versus crypto is gold and silver are two just assets. You don't have to speculate. Gold and silver are just gold and silver, right? Crypto, there are thousands of different cryptocurrencies and new coming up every day. So early on in the process, and I've spoken to this in speeches and interviews before, And this is back even before crypto broke 1,000 for the first time in 2013, but then was below 1,000. So even as far back as 2015, 2016, before the bull run up, where, you could argue the mania hit at 20,000 or whatever, my position was always crypto is here to stay. I just don't know which ones are going to be on top 10 years from now, 20 years from now. The tech is here to stay. It's not going anywhere. I've sat in conferences and anti-money laundering and AML training and CAMS training that as a crypto dealer we have to go through for certifications. And I've been in a room where bankers, compliance department of banks will sit there and tell you, yeah, we think XRP is replacing the SWIFT system, et cetera. I've heard that from banks themselves. So the crypto's here to stay. I just don't know within that sector which ones you want to own. That's the pisser. So there's all these cryptocurrencies flying around. We've seen a bunch come and go. The market caps are always changing. If you pull up the top 5, top 10, top 20. So just as you pointed out in your analogy, I don't know, in the early stages of the internet, you don't know if you're holding the next Google or the next, overinflated BS equity position that's going to fail. And crypto's kind of the same way. There's a lot of cryptos floating around, and the tech is here to stay. But within those cryptos, unless you're going long and bullish entire indexes, and I don't even know if that technology exists yet, then it's hard for a retail investor to go in there and pick individual winners, especially if they're taking an aggressive position. So right now the default is, call it, if I had to quantify the big 4, it's Bitcoin, Ethereum, Litecoin, and XRP. That'll change, and it has been changed. Some would even disagree with those 4. So when someone says, "Hey, metals are dead, crypto's the future," I'd be like, "Well, there's a lot of cryptos. Which one?" So that's what makes the gold and silver investment a little bit of an easier investment too. You're buying gold and silver. It's been around for thousands of years. With crypto, it's like there's a lot of moving parts there. I can't tell you how this is all going to play out in the next 5 years. No one. And the difference between me and a lot of people is I actually can admit I don't know how the fuck it's going to play out. Where a lot of people are like, "Oh, this is what's going to happen. This is here to stay." Again, taking a very axiomatic approach of this is exactly how what's going to happen. Like I don't know. If I had a crystal ball, I'd be a billionaire already. So yeah, I don't know how it's going to play out. We've been, as a libertarian, as an Austrian economic guy, I've been following this thing since 2012. So since its inception, I was interviewing economics professors about it in 2013. So I've seen a lot happen in the last 6-7 years in the space. So yeah, a lot's going to change in the next 5-10 years. But the key I try to convince myself anyway is to keep an open mind about it and know that you don't have a crystal ball. You're not clairvoyant, and I don't know exactly how this is going to play out.
What was your path to alternative assets like gold, silver, and the cryptocurrency space?
My moment was I was an econ major at university, but I was very mainstream. My quote, I know this term is overused a lot, but my red pill moment was the Bernanke testimony after the crash. So after the crash, it was Grayson and Paul drilling Bernanke on off-balance sheet Fed transactions. And they eventually got him to admit that they had occurred, which, as someone who believed in the honesty of, at the time anyway, who believed in the honesty of the government and the central bank and all that. They don't teach you in college that, oh, by the way, the central bankers aren't showing you shit. You can't even audit them. And they, by the way, they're also going to conduct off-balance sheet transactions that even if you did audit them, they do what they want on the side anyway. So they were hammering down on Bernanke, and they finally got him to fess up on the off-balance sheet transactions. And the next question was, okay, where did they go? And he's like, yeah, we're not telling you that. We're not telling you anything. And that was when reality hit conviction in the face, and it kind of changed my life. I'm like, let me get this straight. This guy just admitted the Fed is conducting off-balance sheet loans, which is if any business gets caught doing that, you end up with handcuffs on. And this guy just fessed up to it. And then when Congress further pressed him to say, where did the loans go? I mean, they're expanding the money supply, right? So they pressed him on where'd they go, and he bold-faced said, yeah, we're not going to tell you that. So that was when I'm like, oh my God, the whole thing's a scam. Like this whole thing, we've been brainwashed, we've been educated on a total. This is what they teach you isn't really how the system works, and that's was my changing moment, and that's when I got into Austrian economics. That's right around when the Ron Paul stuff was going on, and that's when I got into gold and silver. So that was kind of when my life and career took a sharp turn.
Could you kind of break down why these off-sheet loans at the Fed would be a problem, particularly as it pertains to the money supply?
Well, yeah, so the money supply is, from M0 all the way up. It doesn't matter. The more, again, if not to fall too far down the rabbit hole, but if you want to start with Menger and then go to Mises, but if the written in 1912, the best book is The Theory of Money and Credit by Mises, in my subjective opinion anyway. And anytime there's an expansion, it doesn't matter if it's hard money or loans, anything that could bid up goods and services. And one thing people leave out is assets too. So that's how asset bubbles occur. There's an expansion of the money supply, both money and credit. And when these things are occurring, things, again, goods and services and assets could be bid up. It's not complicated. The issue is when you're fire hosing liquidity into certain sectors, into certain companies. First of all, they're giving it away for free. Doesn't matter if it's ZIRP or NERP or negative interest rates, zero interest rates, etc. So the best way I heard it articulated, if you really want to get a concept, and I don't even like using this because we, as the U.S. company, we have to do business with banks, obviously. Banking is the only business I can think of. If you go to business school or major in business in university, banking is the only industry I could think of where they get their cost of goods sold for free. So imagine, meaning their cost of goods sold is they're lending money out and they're getting the raw material. They're getting that money for free. So imagine starting a business and the relationship with the wholesaler, the provider of your business, where you get your goods and services from, is actually providing you with that for free. That's at least for the last 10 years, and God knows how many other times, last 100 years. That's the banking relationship with the Fed. Not only are the banks the shareholders of the Fed, the banks own the Fed, but they're getting their cost of goods sold for free. So that in and of itself is a problem, not to mention the fact that, again, if you really are pro-free market, pro quote unquote mark to market, you want assets mark to market if you're trying to buy them, then it's just an incredible fraud. You can't go in and quantify an asset class or a sector if it's artificially pumped up, meaning I could dive in from sector to sector and I want to pay a fair market for it. If I'm trying to buy a house and the Fed is fire hosing off balance sheet free liquidity to the banks, and banks are holding those houses on their balance sheet at an inflated rate. Again, we could dive in deep into the actual micro side of it. The movie The Big Short does a kind of a good job about, if any of your listeners want to watch The Big Short, it blames the wrong people, but the concept is kind of correct, meaning that they're holding these artificial bubbles up, but the movie, again, because it's writers and directors and are liberal leaning, they'll never blame the central bank. For some reason they don't, they like blaming business owners and speculators or whatever. But the whole thing is kind of fraudulent. It's the cost of the assets is fraudulent. How they operate is fraudulent. The relationship between the banks and the Fed is fraudulent. It's again, it's not something you learn in university. If you would sit back and take these kids and actually walk them through their teenage years or university years, and you're like, listen, the people, the entity that could create money out of thin air is actually owned by these banks. They're the shareholders in that entity. And and by the way, they can conduct transactions in secret. Everyone would be like, excuse me, that makes 0 sense. Like, of course that's going to open up for fraud and scamming. And so it's clear as day if you actually know if you understand that pattern of capital flow, of decision making, of who owns what. It all makes sense. You're like, oh yeah, this whole thing's bullshit. So yeah, I'll never understand how that entity has existed for over a century and never been audited. That you can never explain that to me. And even their sales pitch and rationalization for not auditing it is, oh, we must maintain our our neutrality. Imagine someone showing up at your door because you've been able to operate in secret for a decade or a century, and they're like, hey, we want to see this. We get a sense that a lot of suspicious or illegal stuff's going on. Then your answer to them could be like, you know what, I would love to let you see it, but then I wouldn't be able to maintain my political neutrality. I mean, it's bullshit. It's total bullshit. And they say it with a straight face, but the population isn't educated enough on banking, money, etc., to do anything. They're literally all these protests, everything you see over the course of the last 10 years. And Henry Ford said it best: if the people understood how money and banking actually work, there would be a revolution before tomorrow morning. That's true, because it is a total scam. And again, it's a shame. I'm not the only. Everyone in the Austrian side or libertarian side knows this, but it's trying to bring someone, down the rabbit hole or look down the rabbit hole is you usually turn them off because you're trying to articulate so much information at them at once. Again, I've ruined too many family holidays over the last decade. At this point, I just saved my breath. But yeah, that's the danger in it.
Lots and lots of laws are passed. Bad economic laws are passed, and you'll never see Congress repeal the law. They kind of double down, which I think leads to more printing. And it's as simple as, in some ways, on the political side, as that. You'll never see, I think, kind of the bureaucratic, mindset admit that it's wrong, and instead, we'll just keep on increasing the minimum wage, even if for certain small businesses it's unsustainable and it's going to put them out of business. There's really no concept that bad laws really kind of like create the need to print more money over time, which is why the money supply is increasing since the 70s.
It is very, if you look back at recorded human history, and if you want, we can go back to the Bronze Age. You take everything from Egypt through Greece to Rome, Byzantine, blah, 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 all the way up until today. Very rarely do you see individuals or entities give away power once they get that power. Meaning, it's why that's why you never see Congress take term limits very seriously. It's why you'll never see Senate and congressmen reduce their salaries. I think it's why. No, who is it? It's a great quote. It's hard to get someone to understand something when their salary depends on not understanding it. So if the central bank will never give power back, Congress will never give power back. Once you give up an individual or an entity power, it's in their best interest to keep that power. Again, I use term limits as an example. We could use their salaries as an example. These people could almost legally insider trade. It's like they have like immunity from that too in Congress. So all these things that have taken place over decades and decades or centuries, you could argue, you will never. It's why the government keeps growing. If someone wants to really go back and dive down the rabbit hole, all that. The IRS, the income tax, the central bank, all were around the same. That's why Wilson is the worst president in U.S. history. If you look at everything that happened from 1912 to 1918, between World War I, the foundation of the Fed, the foundation of the income tax, the foundation of the IRS, it all happened at the same time. And everything has been on kind of a downward spiral since then. Later you had, FDR expanded everything. So, oh, Social Security, it's for, I mean, come on, guns and butter, LBG. I mean, this thing has become so big, and there's so many people's livelihoods tied to it, that getting them to give back that power is nearly impossible. If someone came to me and said, "Hey, guess what?" I use this as a kind of a fictional hyperbole, and you see it now a lot with SJWs and all that. If someone comes to you and offers you, a scam that only benefits you, it's hard for you to disagree with it or give up that scam. Meaning that, like, okay, Gus, tall Greek guys get to carry a baseball bat and hit people over the head with it. No one could do anything to you. Like, oh, fuck, that law makes a lot of sense to me. Like, it benefits me. I mean, I could walk around unlimited power and immunity. So to give a certain sector or group that type of unlimited power and expect them to one day try to give it back, that's not going to happen. And that's where we're at. That's and it's not a good thing. I don't know. I don't know how it plays out. This government office keeps growing and growing and growing and growing. And it's not pro freedom. It's why it gets a little bit weirder and worse every decade.
We live in 2019, and I'm able to pull up the quote you're thinking of in real time, and I believe it's an Upton Sinclair quote.
Yes.
It is
yes.
It is difficult to get a man to understand something when his salary depends upon his not understanding it.
Yeah, it's a conflict of interest. There's a cognitive dissonance occurs, meaning why he doesn't. It's going in one ear, out the other. So again, everyone should be in Washington D.C. with pitchforks, and it shouldn't be about which bathrooms we're using. It should be about the whole system kind of being a century-long scam, if you will. And let's see, get some transparency. And these people don't know, because they grab them. Why they don't know? It's not complicated. They grab them at 5 years old and start feeding them bullshit for all the way through, elementary school, high school, college, and that's why when most people, and I was no different, most people when they first take the red pill, and I know that term is overused, but most people when they first take it, that's why it's such a changing moment for them, because they're trying to absorb all this information, and you start to question everything you've been taught before, and before you know it, you're at family holidays quoting Andrew Jackson and blah blah blah. So at first it's a lot to take in, but that's why a lot of people, when you try to articulate it to those who don't pay attention to it or are completely unaware of what the hell you're talking about, then you're trying to articulate too much, and you end up sounding like a lunatic, quite frankly. So again, that's why things probably won't change. It's nice to be optimistic, but I'd rather be realistic. Again, if you could preserve yourself and your family, but trying to go out there and spread the message to those who refuse to see it, it's probably not likely.
Before the internet, in order to be put in front of audiences, you used to have to pay money to very few media companies in order to get a television advertising slot or in order to get placed in a newspaper, but that's completely been obliterated. We have the internet today, and now any individual is able to connect with an audience and other individuals through the internet with essentially like out an intermediary. Although we have social media platforms, and for everything negative that people say about social media platforms, I think it's a better alternative than what we had before, where there was just a few media companies charging thousands of dollars, which they still do for television commercials that no one watches. Now, I think that we are able, as you're well aware of and our listeners are well aware of, to share ideas in, I think, a free forum that wasn't possible before the internet and even really these social media companies. Regardless of what you think of their algorithms, they are there for us to leverage, and they are free to use as well, other than our data, or sharing our data. So I see that, like, rather than pitchforks, we have an opportunity now that we can just really become economic participants with lower barriers to entry through platforms like WordPress and having a .com, through getting our message out via social media. And what steps do you think people can take in order to kind of empower themselves?
All right, yeah. So you made numerous points there. Yes, the for a long, and anyone who hasn't read Chomsky, Manufacturing Consent, it's a great book. Despite him being, he calls himself a libertarian, but he's really not. He's a commie. He's just a small he's a small government commie.
But I will
So
say that like Chomsky's done a lot of really great work, and
no, that's why I brought up Manufacturing Consent. It's great. He does a great job, but God, he lost me. I followed him a lot closer. He lost me like 6 years ago. He was at University of Florida giving a lecture, and the libertarian brought up the central bank. And Chomsky's like, oh, the central bank did an amazing job with like he started sticking up for them. And I'm like, is this guy, that's when I'm like, all right, this guy's a commie bullshitter. Chomsky's brilliant. Listen, he's the most published living human being right now. So I'm not going to sit here and down talk Chomsky. He does a great job analyzing what's going on. First of all, he's a linguist, not an economist, but he does a great job analyzing what's going on. My disagreement with him is the solutions. But why I brought him up was specifically for Manufacturing Consent. Anyone who hasn't read Manufacturing Consent should, because it really identifies the gatekeepers and the power the media had and all that. Since we went down the Chomsky rabbit hole, let me say one thing about it. The reason collectivism, and I've never met a collectivist, it doesn't matter if it's a socialist, a communist, a fascist, it's always been about collectivism versus individualism. That's what this whole game is about, always. When you peel away the onion, it's always collectivism versus individualism. And the reason, even those who are as intelligent as Chomsky, is they can't grasp their utopia is horizontal collectivism. This utopia where all these people have exactly, equal power and blah, blah, blah. But if you really take a look at that line, one of two things always happens throughout human history in any collectivist model. It's leadership arises, and immediately when leadership arises, horizontal collectivism becomes vertical. There's no such thing as horizontal collectivism. That's like, all right, we achieved the revolution, we've overcame this, and we're horizontal for about 10 seconds. And then immediately leadership arises. The minute leadership arises, it becomes vertical, meaning that I can assure you, Mao, Stalin, Lenin, Pol Pot, go down the list, they weren't eating with the fucking peasants. Like, I know they want you to, but it's a sales pitch. Horizontal collectivism is a sales pitch. The minute power is achieved, it becomes vertical. So that's the first scenario. The second scenario is even when a majority is achieved, even if it's horizontal for 30 seconds and it doesn't become a hierarchy, you could have tyranny of the majority, where the 51% could reign terror on the 49%. And so again, it goes from horizontal to vertical. That's exactly what 2019 liberals are trying to do in America. It's some really simple math. And they said, if we take these 10 groups and we demonize those evil, straight, white guys, we could basically take 70% of the population and turn them on to 30%. So if we get women and this and immigrants and blah, 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 blah. Yeah, if you hear liberals talking in 2019, they sound like Nazi. When liberals in 2019 talk about straight white guys, they sound like Nazis talking about Jews in 1932. Like it's incredible to watch. Just take a step back and go, God damn it! It's popular to go on CNN right now and say, straight white guys are the devil. And again, that's what went through the liberal mind. Well, they ran some numbers and they said, if we could get these 70% to agree on shit, we could go tyranny of the majority on this group. They found a villain. So that's why horizontal collectivism doesn't work. As it pertains to media, yes, they were gatekeepers. The problem is what's occurred, and you sound like more of an optimist than I do, is the gatekeepers have just changed. The gatekeepers went from the media conglomerates to the IT companies. So Google, Alphabet, whatever the parent company is now a gatekeeper. Facebook is a gatekeeper. Twitter is a gatekeeper. Per your point, as an entrepreneur, yes, you could start a business with minimal barriers to entry, with not a lot of startup capital. That's all good stuff. Listen, I was one of them 9 years ago when we started this firm. So it didn't cost. I mean, again, you get a URL, you have capitalism really isn't complicated. You find a good or service that you can provide a profit, and you want to try to confirm it's scalable, basically. So you could start up a business with very minimal cost, et cetera, but there still are gatekeepers. It's just that it was consolidated to the media conglomerates 40 years ago, and now the IT giants are becoming the gatekeepers. If you stay kind of politically neutral or whatever, you probably won't, burn any bridges. But they deplatform people all the time. They demonetize people. If you really piss them off, then the payment processors and banks will come on board too, and they'll shut down your payment process. You won't even be able to accept credit cards. So there still are gatekeepers. It's not as obvious as it was 40 years ago, if that makes sense.
So what advice would you give for a budding entrepreneur who wants to start a business?
Like I said, if you really simplify it, it's a good or service, or both. My company offers both. So our retirement accounts are a service, and then the crypto and metals are an asset, a good. So if you're an entrepreneur, doesn't matter if you're 15 years old. I have this conversation with my nephews all the time, trying to keep them pro free market, obviously. Is provide a good or service that you could identify where your margin's coming from, a profit. That part's pretty simple. And the second part's a little bit more complicated. You want to probably lean towards it being scalable. Meaning, if you're providing a good or service that's not scalable, then yeah, you can make a decent living, but you're not gonna grow it's hard to grow the business. So again, there are numerous other variables, like you brought up barriers to entry, et cetera. The crypto space has numerous barriers to entry now, with the government involvement, regulation, blah, blah, blah. Federal and state entities are always up your ass. But again, good or service with a profit, identify the profit, preferably a larger profit. I have buddies I grew up with who, the richest guys I knew, just had, and they ended up selling their companies. They ended up having the difference in their model and someone like ours is their margins were just ridiculous. So like whatever product or service they were offering provided 50, 60, 70% margins. That's, if I had to say there's a downside in bullion, in gold and silver, I'm not talking about for the investor, I'm talking about from the entrepreneur. It's the margins are shit. They're paper thin. It's not a high margin business. It's a capital intensive business. There's tons of money flying around with a lot of liability, but it's not high margin. It's again, you're talking about bips. You're not talking about, oh, it's 50%. You're not selling widgets or t-shirts from China at 90% margin. So try to identify something that's higher margin, and then confirm you could try to scale it. Again, it's that you make those first couple transactions, you get excited, but always in the back of your mind be thinking about scaling. Like, how do I grow this thing? How do I grow this thing? How do I grow this thing? So that would be my advice. If I had to even if I had to give this advice to myself 8 years ago, this would be something similar. I would tell myself.
Could you talk a little bit about growing a business? Like, what are some of the best strategies you've learned, and what does it mean even to grow a business?
That is something I still struggle with to this day. Meaning that the mindset when you're in startup mode is so much different than the mindset when you're in growth mode. When you're in startup mode, you're all about survival, right? I got to keep the lights on. I got to do this. You are nitpicking every dollar and cent. Take something that's very common, especially on the IT side of things. If your business is a website, like hosting, like who's hosting your site. At startup mode, you're like, God damn, that company wants $44 a month. That's absurd. So you in startup mode, again, because your capital's limited, your experience is limited, you don't know if the thing's going to succeed or not. In startup mode, you are very cognizant of the red hemorrhaging off the balance sheet. In growth mode, you still, you want to be frugal. You don't want to piss money away, but you have to change your mindset to, okay, shit, it feels good. I made it. I don't have to worry about, feeding myself anymore. That part's covered. But now you have to worry about, okay, I'm trying to bring 10, 20 employees on board. That's it's a it's a whole different mindset. You have to realize you're going to spend some of the company's money on growing the business. You're a little bit less frugal. You can't be as micro on everything too. You have to outsource control of certain things. It really comes down to economic opportunity cost. So if my time as the owner, I should be closing business development deals with institutional, crypto exchanges. That's where my time should be spent, like negotiating macro large stuff. If I'm spending time nitpicking how many bags an employee's bringing on a flight for a conference, like, all right, shit, I might catch a $25 expense. You can't, as an owner, once you achieve a certain level and you're trying to grow the thing, you can't nitpick all the micro that you got accustomed to nitpicking in startup mode. Again, you have to give away some control, and that's one of the things I struggled with. Is it's your baby. You grew this thing, it's paying all the bills, you're proud of it, all that, but you have to, if you're going to grow the thing, you have to give away some of the control to people you hire, people you bring on board, and that takes some getting used to. So if I had to identify a couple of things that have been most difficult for me, it's don't be as frugal anymore. You don't have to watch every single nickel of every single transaction, and giving away that control that you got used to, and certain elements that, as an owner, it's not a waste of your time, but you just could be doing more productive things, more macro, more things to actually grow your business, if that makes sense.
Yeah, definitely. I'm curious about some of the biggest like losses that you faced and like how you overcame them. Or just simply put, like, what are the biggest lessons you've learned as an entrepreneur over the last, like you said, decade about?
Well, once someone has a company and they succeed, you could, all right, your mortgage or rent is covered, you could eat, like your lights are on, all that. A lot of people who aren't entrepreneurs and are employees have like a resentment or animosity towards successful business owners. First of all, they don't realize that 90% of them fail. They also weren't there in the early days when you were working 70, 80 hours a week. You didn't have a personal life and blah, blah, blah. They only look at the end result. So I think that kind of, again, there's a great unless you've done it yourself, you don't know. For those who have done it, they're like, shit, you're right. Those first couple of years were the stress, the ulcers, all of it. As it pertains to my biggest mistakes or regrets, it's not easy. Meaning that it's not only are you always working, I work 7 days a week. Like, I'm never off. Emails, because something needs attention, I'm always doing it. Like, it doesn't matter if it's Sunday at 10 p.m. When you're an employee, you don't give a shit what happens. 8 to 5, you dial out. You punch your card, you're done. Bye. Not my problem. Hope it goes well. When you're the owner, there is no punching out. If something's on fire, if something requires immediate attention, it's your responsibility to do it. My greatest mistakes or things I regret were, there's a fine line. What most listeners usually don't want to hear this, or they don't give a shit because it's not their problem, but there's fraud. Most people, the Madoffs of the world, are easy to identify. What most people don't realize is there's a lot of fraud in every single direction, including consumer fraud. So we don't even accept credit cards for bullion. The reason why is because of consumer fraud. Meaning, there are bad people out there. Yeah, I mean, so what gets all the fame and all the CNBC attention is all the Madoffs of the world. We all know that. But what gets less attention is the lady pouring the hot coffee on herself at McDonald's, trying to sue them. Like all the consumer fraud that takes place on a daily basis. And as a bullion dealer with paper thin margins, you send someone $10K worth of bullion, that shit's out the door. And by the way, you didn't make much money on it. So that person could say they got a brick in the mail or never showed up, or you deal with consumer fraud all the time. And that's fine. It's part of cost of doing business. But entrepreneurs should be cognizant of that. I wish I would have known that. And there's nowhere to, there's nothing you can really do about it. I mean, no one, oh, woe is me. I'm not whining about it. It's just a part of doing business. People try to scam the system. They try to scam companies all the time. So that's one thing I would tell new entrepreneurs or people in startup mode: be cognizant of liability in every direction. The government's always up your ass. Competitors are always trying to shoot you down or whatever, troll you. You have consumers coming after you. You're constantly negotiating with wholesalers where you get your goods from. So it's a lot of moving parts, man. Hey, IT guys, you got unless you're a computer scientist and a programmer, you constantly have to watch the IT guys. They could, if you hire the wrong IT guy, you could flip a switch and shut you down. Like, so it's a lot of moving parts. It's a lot of stress. It's a lot of liability, and that's what you have to be cognizant of. But the reward is fantastic. If it does well, no one could fire your ass. You know, if you do a good job, people trust you. You can't be fired. The other upside is that you good or bad, you can only blame yourself. If it takes off, you did good for you. You made it. If it fails, try again, or maybe it wasn't for you. I can't speak to that, but it takes some accountability and it takes some sacrifice. There's no doubt, especially in the early days. And that ties into what you said earlier about growth. I think you have to stay as hungry as you're growing as you were in startup mode. I think there's something in the human psyche that once you're, again, and you could revert to like a Maslow's hierarchy of needs, once your general needs are met, a lot of people tend to take their foot off the gas and say, okay, that's covered. I could take the vacation once in a while. I could do this, I could do that. And they lose that trait conscientiousness, that effort, that drive, because they could cover their basic living expenses. To take it to the next level from a growth perspective, you always have to be that hungry guy. You constantly have to scratch and claw and get after it and all the rest.
What's next for Perpetual Assets in 2020?
Well, we're launching our site's been completely revamped. We're launching that hopefully this week. Again, I'm a slave to my IT guys, unfortunately. So that gets launched this week. Much more robust, much more in your face. We've already booked out our next. So the site's getting totally revamped and redone. We've already announced our next 6 conferences. So we're in Miami for the crypto conference in January. We're back with Berwick in Mexico again for 50 or 6 years in a row. In February, Freedom Fest. I'm speaking at Freedom Fest, and we're exhibiting in July in Vegas. We're looking at another show in New York in April. So we got the big conference schedule first half of 2020. And that aside, we're always trying to add little things to differentiate ourselves from competition as well. So we're trying to get a lot more robust platform stuff. The one to this day, it's not a struggle. It's more, I wish I had, instead of economics and philosophy in college, I wish I had went into computer science, because then you could, if you're running an e-commerce business or a website or whatever, it helps to, again, you have to outsource a lot of that or hire people or whatever, which is fine. The problem is it's kind of like a mechanic, or dentist. You never know if you're really being fucked over. So you're always a slave to the IT guys. Not a slave, but you want things done, and they're like, oh, this, that. You don't know if again, it's a headache. But if I could do it over again, I would have went into to write. I would have learned, as they say on Twitter, I would have learned to code. So yeah, that's what's next for us. Massive upgrades, conferences, continued growth. That's what we have on our radar.
That sounds exciting. Wow, lots of good advice there. One thing that stuck out to me is that July in Vegas is always a lot of fun.
It is. It really is. I was there We did it a couple of years ago when it was still at Planet Hollywood, and then we took 2 years off. And I attended last year. We didn't exhibit or speak. I attended last year, and I was really happy with the Paris layout, and the speakers were great, and all the rest. So we reached out to them, and we booked it down again this year. So that's booked. We're a gold sponsor, gold exhibitor, blah blah blah. We'll be at Freedom Fest for sure, and that's a great conference. I think probably of all the ones we do, the biggest. It's not specifically for crypto and gold, but again, that's where the root of what caught on with the crypto thing, the way I learned about it, was through economics and politics, and that still holds true now. It's not make no mistake, Freedom Fest is a political conference, but a lot of it is geared towards wealth preservation, metal. We won't be the only guys there talking crypto and metal. There'll be numerous, but it's a great show. Huge, probably the biggest political libertarian leading show there is in the country.
You mentioned the importance of computer science and software programming, and I just wanted to note that through platforms like Udemy and even free stuff on YouTube, you can go through lessons and learn the basics of coding today, or even like a nice entry point into that world is technology like WordPress. And really all WordPress is a bunch of pre-packaged computer programs and files that you can go in and edit as you please. And it's just kind of like put into a cookie cutter form for you to just deploy a website pretty quickly. Brad Traversy is a great computer programmer who has, created dozens of videos on technologies that are relevant for somebody who's a budding software programmer or interested in diving in. Just as
yeah, the one thing I'll say, and I probably should have mentioned this when we were talking about entrepreneurship, et cetera, is when you own the place, you start a company, whatever, you have to remember every company. You could pull up org charts on companies, even larger companies, call it $100 million gross receipts a year. Pull up org charts on them. This is more of a business school dialogue. Every company has 6 departments, 8 departments, 12 departments, depending on what the company does, depending on their function. When you're a business owner, you have to achieve a certain level of knowledge and expertise in all those departments. So you sure as shit better have some general understanding on accounting, bookkeeping, a role that if you get big enough, you'll eventually get a CFO for, et cetera. But you have to have a grasp on accounting. IT, you have to have a grasp on what might be one day a VP of IT or a CTO. You have to have a grasp of technology. You have to have a grasp of operations. Operations, probably the most important department in the company. The number 2s behind CEOs are usually COOs. You have to have a grasp on operations. You have to have a grasp on marketing. How are you going to market this thing? Sales, another one. Bam, 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 bam. So when you own the place, you don't have to be an expert in every single department, but you sure as shit better have some general knowledge of how all those departments work, how they intertwine, how data and revenue flow through organizations, et cetera. You're wearing a lot of hats, and that's very important for anyone who's interested in getting into business or becoming an entrepreneur. Know how revenue and sales, know how data and revenue travel through a company and all the departments that need to touch it and execute upon it. There are numerous.
Well, we've spoken today with Gus Demos, the managing partner and founder of Perpetual Assets. Thank you so much for sharing your insights into the entrepreneur's life.
I appreciate having me on. I had a blast.